The African CEO Forum has come to close in the Swiss capital, Geneva. The forum, of course, brought together more than 1,100 participants and key decision makers in industry, finance and politics. CGTN's Uche Okoronkwo has been covering that particular forum. She joins us now live from the Swiss capital with a lot more details on what exactly went on down there. Uche, good to see you. Now, of course, quite a few things happening today. One of the highlights, of course, was the fact that the Ghanaian president, Nana Akufo-Addo, was there. Senegal's Macky Sall was also present. What did they talk about? What did they cover on the closing day of the forum?
Ramah, quite an interesting discussion took place today. Let me give you some of the highlights or some of the more exciting points that came out of that presidential panel that took place this afternoon. Now, they talked about navigating the current economic waters, and they focused on the fact that Africa cannot rely anymore on the IMF and foreign aid to fund Africa's economic future. They talked about the fact that fundamentally it would be more fruitful for Africa to start growing its domestic market. They also talked about the growing trend of protectionist and isolationist policies globally, and they didn't seem too worried, actually, Ramah. In fact, President Nana Akufo-Addo alluded to the fact that African countries can take a cue from U.S. President Donald Trump in focusing on rebuilding its domestic market rather than going outside. And they also alluded to the fact that trade and cooperation in this current global reality is a necessity. So suddenly they weren't too worried about what's happening in Europe and the US, but they did allude to the fact that the uncertainties were a little bit worrying. Now, they also talked about the idea of an African free trade area, and they were both keen on the idea. Certainly, it's a necessity for Africa to grow its regional capacities. They did talk about the fact that it's an opportunity for the private sector to grow its regional viable institutions going forward. So one thing that came out of that presidential panel today is that Africa needs to stand on its own 2 feet going forward. And certainly it's not just the government's job, but Africa's private sector as well needs to learn to stand on its own 2 feet. Now, earlier on, I spoke with Kenya's central bank governor, Patrick Njoroge, and I tried to talk to him and find out from him his plan and his outlook for Kenya's financial sector, of course, in light of those tough interest rate caps that, of course, have impacted banks' balance sheets, of course, in light of the drought that is going on in the country, and in light of the upcoming election. Here's what he had to say.
Banks need to be more transparent in the way they are reporting things, and indeed the numbers that are put out in the various reports need to really make sense. Secondly, enhancing governance, which is better governance, which is the point you mentioned. One of the things we've discovered is that some banks were very weak in terms of their governance. So, and this means that they were not therefore discharging on their mandate in terms of them fiduciary responsibility, having received certain funds from their depositors. And the governance here means that all parties, indeed the shareholders, the board, and also management need to be really understand their responsibility, and also, for that matter, strengthen understand their responsibility and discharge on that responsibility. Third element was better business models, stronger business models. And this, again, we're still talking about the banks, which is really our specific domain. Here is where I think banks have been very comfortable in looking at things in a particular way and doing business, which is the same old sort of thing. So here they have to look and figure out how to become more resilient.
In Kenya, banks are complaining that interest rate caps are hurting their profits. Are we going to see a reversal of this going forward?
We are still monitoring, we are still looking at the data that is being put out. Mind you, the point here is not to speculate what we expect to see, but rather to see if the data confirms what is going on in the economy. What is clear is that this is a temporary phenomenon. That when the president signed this bill into law, he did issue a press statement or a communique of a kind. And the last paragraph did mention that we still believe in the free determination of interest rates. So in a sense, this is a temporary deviation from what where we have always been in terms of policy. And the expectation is that we'll go back to a sort of a free determination of interest rates.
Now, with elections coming up and, of course, the current drought situation in the country, how are we going to see this impacting inflation and certainly monetary policy decisions?
The drought, I think, has only affected inflation. It will affect GDP as well. But I think the point is that the first three months have been quite dry, and we expect that we'll get rains as they come usually in April, and by May there'll be some green shoots and vegetables and things like that will be back in the market. So hopefully, if that happens, meaning if the rains come as they are due, or when they are due, and if they are plentiful as generally they are, if that happens, then the increase in inflation will be reversed and inflation will be back down in the usual things.